Hey everybody, hope everyone's doing well and had a good day. In this video, I'll do a brief recap of the Emini 5-minute chart for Friday, April 25th, 2025. I want to scroll back and kind of do a quick bar by bar just to share some thoughts as if it's what I see in real time. And we'll go back to, maybe we'll start with this. The first real directional move of the day, bars 3 through 5. We have a 3-bar micro channel for the bears. That's good for the bears. They'll probably get a second leg down, but what's the context? We had a bull trend to the left. Maybe we've been in a trading range since about bar 40 over here. And we can draw support and resistance using, we have a bull channel line here. The market seems to be respecting it as resistance. Every time we approach it or try to break it, we pause and reverse back down. That's happened several times, so that seems to be a pretty good level of resistance to pay attention to. And then over here, if we do a best fit line, maybe something like that. Remember, support and resistance, when you're drawing lines, it's kind of like a force field, and it's not like a perfect line that every computer is paying attention to. And I kind of think of it as a force field, and price can break out beyond it and overshoot the support as we did here, bar 69, bar 5, or it can undershoot support and resistance like 50, 50, 51, 52, undershot the support, 65 undershot resistance. But you can see most bars contained within this expanding triangle type of bull channel. And so we have a 3-bar micro channel down to bar 5, probably sellers above. What's the problem with selling the close of bar 5? Well, you're right at the support level. And like I said, every time the market seems to touch this invisible support level, we rally. So maybe not ideal to sell right here. But I do think if we get above bar 5, maybe bar 4, there's probably sellers above and a second leg down likely because of the trapped traders. You had some traders buying below bar 2, trapped on 3, 4, 5. Maybe if you're very quick, you get trapped buying below 2. Bar 4 lets you out at break even. But in any case, there's resistance above here. It looks like this breakout point, the bar 2 low, is just about the middle of this trading range or bull channel. So there's a couple of reasons to expect resistance here. And then after a 3-bar micro channel, the bulls probably need a double bottom, so a second reversal, and that implies that the bears need a second leg down. And what happened on bar 7? Well, 7 broke a trend line. And if we think about maybe bars 3 through 5 or 6, we think about a smaller time frame. Or first, let's look at the bars on the 5-minute. Bar 3, pretty decent bar for the bears, but it's an outside bar. Outside bars are trading range bars. We broke out above the prior bar, broke out below the prior bar. The bar before the outside bar often gets retested. So right away, this move down for the bears, starting with an outside bar, takes some points off. And then look at the momentum. Notice the size of the bodies of the bars. 3, big bear body. 4, smaller. 5, even smaller. And then more prominent tails as we go on. Bar 5, really a trading range bar. And then 6, an inside bar with a bull close. And still prominent tails. So to me, on a smaller time frame, 3 through 5 or 6 is a bear channel, getting weaker as it goes on, as trends do. And then 6 being an inside bar, to me might be a 1-bar final flag. Inside bars are triangles on smaller time frames. You have a lower high, higher low, range compression, breakout mode. even if we get one more breakout to the downside, I suspect we'll find buyers below. Why? Because of the support and because of the price action leading the approach to the support. Does it look like we're breaking strongly below the support level, or does it look like we're bouncing as we've done several times before? So what bar 7 does for me is it breaks the bear trend line. 3 through 5, it's a bear trend on a smaller time frame. 7 breaks that trend line, and in the same bar retests the trend's extreme. Doesn't get quite to the low, and maybe we will on bar 8, but for me, on the minor scale, bar 7 is a major trend reversal setup. Bear trend, trend line break, retest, and then bar 7. For me, I don't have a system developed for this, but I notice the pattern fairly frequently. I think bar 7 is a buy the close bar because of the major trend reversal kind of pattern, and the context is good. It's on support in an overall bullish market. So I wonder if we're going to go back and test the resistance above the bull channel line. And sure enough, it looks like bar 7 was a buy the close bar, but the problem with bar 8, now we have a vacuum test to the top of the range. We're not quite at the top if this is the top, but we're testing resistance, and we had, let's see, bar 3 broke out above bar 2. Remember that outside bar? There's trap traders here at the high of 2, so probably resistance here, but strong enough up for a second leg, plus a micro gap. Good for the bulls. 7 high, 9 low. There's an open gap. So at this instant, what's the context? Because now we have a 3-bar micro channel to the upside, and that's good for the bulls, like I said. Plus there's a micro gap, but the location is not good. We're right at resistance. Another trader will draw resistance like this. We have a high, a lower high, and maybe a lower high here, bar 9. So because of that, it looks like the market is testing and obeying resistance. It looks like this might simply be a vacuum test of resistance. And I'm careful with the terms I use because different terms mean different things to me. So bar 8 is a breakout bar. It's a trend bar, but it's minor. It's within a trading range. So in general, I'm only going to use the term breakout when the market's breaking out clearly beyond support and resistance. And in this case, bar 8 looks more like a vacuum test of resistance, and it's being contained by the resistance. So to me, this is not a strong breakout. Again, it might just simply be a vacuum test of resistance. What's a vacuum test? When price moves quickly to support or resistance, and it can be caused just as much, if not more, by the opposite side. So what I mean by that is this is a bull vacuum, but I wonder if it has more to do with bears stepping aside, thinking we don't want to sell down here as we lose momentum, we're at support, but I'm willing to sell a deep pullback because this bear breakout still should get a second leg, even if the pullback is deep and the second leg is more delayed. So we vacuum up to resistance, good looking bull bar, but then all of a sudden momentum disappears. So what that's telling me is bulls who bought here are scalping out and bears are beginning to sell, looking for a second leg down of this. It's a big down, big up situation. So this, again, this 3-bar micro channel, 7 through 9 should get a second leg. But how deep will the pullback be? Because now we're in the sell zone of this structure. So then we get a bear bar closing near its low, 10. Probably better to just exit longs if you're long, and I think it's okay to sell below bar 10, at least for a scalp. But probably buyers somewhere below, whether it's a new low of the day or this trend line. And I made a vacuum test. To me, this looks like a vacuum test of support, bar 11. Here's a bad signal bar, 32, from yesterday. And who knows, maybe this channel is evolving into a trading range and we have to get back down to lower prices. But the bar closed, looks like on that support level, so this still seems to be a reliable support level. Let's see what the next bar does. 12 breaks below it, closes below it, but micro double bottom. We went down, up, down, and up. And even though 12 closed below the support, now it's closing above the prior bar. So we're not getting bars closing below prior bars. And then 13, bull reversal bar. You can call it a micro triple bottom. You can call it a wedge. We had a failed breakout of a double bottom. It's functionally a wedge. Again, 1, pullback, 2, pullback, 3. So maybe not a great wedge shape, but again, functionally it's the same. Failed fair breakout of a double bottom becomes a wedge bottom. Now we have a decent buy signal bar, and the context looks decent. Remember that support level seems to be holding. Bears get one close below it, and then we reverse right back up. So now I'm wondering if this is a trading range and we're probing up and down, we're testing support, resistance, support, resistance, support. Are we going to vacuum back up and test resistance? And the first target might be maybe the bar 9 low. 9 wasn't a great stop order sell, but if you bought below 9, and buying there isn't great, you're at the top of the range, but traders who, let me put it this way, traders got trapped at the low of bar 9, whether they bought here or they did not sell. And that's going to create a magnet. In trading ranges, gaps get closed. And the context looks reasonable for a reversal back up and a test of resistance. So the first target might be the bar 9 low, then there's this bear trend line, and then the bull channel line. So there's several magnets above. And then there's also, I have yesterday's high drawn in the blue horizontal line. 14, good bar for the bulls, not climactic. And the body looks a little bit bigger than the body of bar 13. So momentum increasing, but not climactic, and the context is good. So probably buy the close. 14, 15, still probably buy the close. Maybe a little climactic, the body's getting bigger, but still the move is fairly uniform. And again, the context is pretty good. We had, looks like maybe 3 legs down. So this was actually a nested wedge, 1, 2, 3, and then here, 1, 2, 3. So now we're on the buy above 13, a possible swing trade to test the highs, and this looks reasonably strong for the bulls, second leg likely. But the stronger the breakout, the more shallow you expect pullback to be. And when there's a micro gap, Ali talks about this in the breakouts research paper. When a breakout and follow through or a micro gap or a micro channel has a micro gap, you expect a more shallow pullback. And if you do a study on that, you'll see the numbers for yourself. You'll prove it to yourself. So here, when the context is decent and there's a micro gap, another one here, this is probably going to get a more shallow pullback, and then we'll probably get a second leg up. So we tested that first target. There's a reaction on bar 17, but is 17 a good sell? No. The first reversal is probably going to be minor. So buyers below, maybe we fall below 15. Even if we do, probably buyers here. And then again, second leg up likely. Next target might be this bear trend line, and if we break above that, maybe we'll get up here. 18 fell below the last strong bull bar. 15, we found buyers. That's to be expected. And this for a high one, not ideal. Fairly big bar, big risk. You're buying right where traders got trapped. Buying here, we sold off. But as far as selling, still not an ideal place to sell. The location would be better if we were higher in the range. So not a great sell, not a great buy for me. Probably a wait on bar 18. 19, better for the bulls, worse for the bears. There's a second entry short below 19. 1, 2. But this is also a high 2 for the bulls. After a bull breakout, that's probably going to get a second leg. 18 tested breakout points, didn't quite get down to them, so there's still a gap. And that, because of that, there's trapped traders in the market. Traders trapped down here, forced to either chase and buy higher or bail out of their short, thinking the market's going to be higher soon. I better get out of my shorts and look to sell higher. And the bulls are going to hold on, looking to take profits higher. And we start to drift up here, testing the bear trend line. Looks like we're obeying it at this point. 24, second reversal down, nested low 2, low 1, low 2, but here's 1 and 2. So 24 is a good bar, but now it needs follow through. And whenever a bar needs follow through, you're implying that it's a bad stop order sell and a good limit order buy. And in this case, a tight trading range. It's a fairly tight bull channel up to it. We may test a little lower, but I still think the bulls need a more symmetrical second leg than this. And then bad follow through 25, which is not what the bears needed. They needed follow through. They didn't get it, and that can create a buy vacuum on the next bar. And in this case, the bears got their second leg, 24, pause, second leg down, but now it's a double bottom. Nested, 1, pause, 2, and 1, 2. Even here, 1, pull back, 2. So a couple different ways to see two legs down here. $27, a low one short, but context not good. We're in the middle of a tight trading range. If we get this resistance, this support, we're in the middle of the range, lots of overlap, and it's a limit order market, so traders are buying below bars, selling above bars. I meant to keep this video around 20 minutes, and I got to speed it up just a little bit, but I want to keep the same theme, kind of going bar by bar. So here's a vacuum to the resistance bar 29, but instead of reversing down, we're breaking out above. We got to close above, another close, 3 consecutive closes above the resistance. This is changing. Before, every time we touched this resistance level, we vacuumed up to it, sold off, vacuumed up to it, sold off. Now we paused and we're breaking above. And at some point, after maybe 3-4 bars, there might be a give up bar, which is where bears who are hoping for the resistance to hold, they're trapped and they need to exit, and they buy back shorts, which contributes to the buying. And then you have bulls who were hoping for the breakout, but they're also trapped because maybe they didn't buy here. They waited for follow through 3-4 bars. Then the bulls start buying, and eventually this channel, it's tight and it's a breakout. It's probably going to get a second leg up. The bears don't really have much to sell here. And then 35, kind of a give up bar, might be a measuring gap. Maybe go for a measured move based on the start of this leg to this gap, and that takes you to yesterday's high and also near this bigger bull channel line. So there's magnets above, and so far really nothing to sell. And still really nothing to sell. 40, big bear bar, but probably just a vacuum test of support. And it's a trap. It's trapping bulls who had stops below 37. And it looks like we're testing maybe the midpoint of this gap from the high of 34 to the low of maybe 37. The midpoint is the purple line. You can see that's where we tested. So that's a functional price level of that micro gap. The next target would be the high of bar 34, but the buying into the close is weak for the bears. This might be in one bar, a breakout pullback. Maybe 40 gets a second leg, but it looks like a minor reversal. And that was the second leg. During bar 41, we sold off, pulled back. Bears got a second leg to the midpoint of the tail on 40, and before they gave up. So a micro double bottom in a tight bull channel, bulls will buy above 41, thinking we'll get at least a little bit higher, and there's not much for the bears to sell here. And we're vacuuming up to more resistance. Here's yesterday's high, breaking above it. And we're approaching this bigger channel line as well, like I said. So 47, testing it, finding a minor reversal, but still looks like we're breaking through at 48. We got one close slightly above, and then 49, another pause. So we're at least pausing at resistance here. Very tight bull channel. Strong for the bulls. The bears need a major trend reversal here. They need a trend break and a retest of the trend's extreme. But what the bulls are going for here is low probability. That really wasn't a great line. I just want to draw. I was thinking of a parallel, but maybe just something like that. We have a bull trend line. We have the channel line. We're getting squeezed into a tighter range. And here, even if we break out above the bull channel line, it's more likely we get the reversal. Al Brooks talks about there's a 75% chance that we get the bear breakout of a bull channel. So you can think of bull channels as bear flags. Tight bull channels are breakouts on higher time frames. You have to read the context, but we know that there has been resistance back here that the market was paying attention to, and we're testing it again up here. When that's the case, you have to wonder, is the breakout of the channel line going to fail, as it does most of the time, and then reverse down and test the trend line, which bar 50 did. 50 breaking out of the trend line. Actually, I'll have that drawn for another moment. Maybe we're just testing it. Maybe that's an undershoot. 50. Bear breakout. It's a big enough surprise to trap traders above. We might not be down. We might not be done going down, but I think we will end up getting a deeper pullback. This is big up, big down. For a major reversal into a bear trend, probably going to get a retest of the bull trend's extreme first. And 51 is bad follow through. So for the bears, decent breakout, but it's only one bar. I would say the most recent major higher low was bar 40, and we did not break it. So it'd be better if the bears can break below here and then get a retest, and then maybe a double top, maybe a lower high, major trend reversal. 52 breaks below the major higher low. So at that point, the market is either in a trading range or an opposite trend, a bear trend. Sell climax, pause, another attempt down. Not the strongest selling, but it's enough to trap traders above. So I do think there's probably sellers above, but here we're testing support in a bullish environment. Probably not the best location to sell here, but probably sellers above 52, 51, the low of 48, anywhere up here. Another follow-through bar, 53, but you can count 3 legs down, sell climax, pause, another attempt, another pullback implied, and then a third attempt down. We're also testing support. Here's a breakout point. The market broke out above this swing high, and we're retesting it on 53. I expect at least a bounce here. And 54, reacting to it. So the bulls probably need a double bottom at this point. And even if we do rally, I think this was enough selling to disappoint the bulls. And this looks like a big, like I said, either a broad bull channel or a trading range. If that's the case, here's a parallel of the channel line, and maybe that's the trend line. So at this point, I'm wondering, do we have to retest the highs and then maybe convert into a trading range or a bear trend? But I think because this was fairly strong, it's less likely, and this breakout wasn't all that strong. momentum, pause, overlap. Not the strongest trendline break either. Pretty good distance, but the behavior not as strong as it could be for the bears. And I think that increases the chances that we end up going sideways rather than down. I still think we'll probably get a double top, maybe a lower high, maybe resistance at the 48 low. By the close bull trend, buyers below 48 get trapped. So to me, probably resistance there. And then this is an opportunity to, if you did buy here, you could buy more above 54, reversal bar on the trend line after 3 pushes down. So you buy above 54. You already bought below 48. Your average entry is the purple line, the midpoint. So we might find resistance there as well. So I wonder if there's a reaction here. This is a fairly strong micro channel, but big down, big up. I wonder if we have to pull back first. So there is a reaction there. We had to pause. But probably buyers below, second leg up likely. And then we're vacuuming up. This might be strong enough for its own second leg, but we can see it looks like the upside is limited. 62 testing that low of 48. I'm suspecting a reaction to that resistance here. It doesn't look like 62 could close above that resistance. And now I wonder if we're going to have 1, 2, 3 legs up to the top of a trading range. 65 is a trendline break. This is all minor. It's in a trading range. Big up, big down, big up. 65 reminds me of bar 7. Bear trend, trendline break, and retest within the same bar, and then a bull breakout. I wonder if here we get bull trend, trendline break, retest in the same bar, and then a bear breakout. And it's not as big, but similar energy, 66. The market seems to be respecting yesterday's high, tried to break out above it, below it, we're hovering around it here. So I wonder if we'll end up going more sideways around that price. I also wonder if it's a triangle at this point. So lower highs, higher lows. We have that bear trend line. It respected it on 68 again, but very tight range in here. Hard to really trade, for me anyway. And then 72, bear breakout, but late leg, 1, 2, 3, at support, probably better to buy here. And if we do break out to the downside, we'll probably retest this area. And it's a weak breakout, we come back to it. Still lots of overlap. We're still contained within the bull trend line and the bear channel line, but the range is getting compressed. We're getting still lower highs and higher lows. $78, $77, buy vacuum, test of resistance. Again, I call it a buy vacuum instead of a bull breakout because we're not clearly breaking out of anything major. And until we do, I'm going to assume it's a vacuum test of resistance. It doesn't mean I'll sell the close 77, but if we get a weak follow-through bar, like a doji, 78, maybe then 78 to sell the close bar. Not that I would do that on bar 78. It's too late in the day for me, but the principle for me that I'm thinking through is, okay, buy vacuum. I don't necessarily want to sell the close 77, but if there's more evidence of bad follow-through, like a pause bar, 78, and the context is good, like we're at resistance, maybe it's a second leg trap, 1, 2, then maybe 78 is a sell the close bar. And that's about it for this recap. Those are my thoughts. I've also kind of taken a step back from YouTube. I'll say a few words on that. I've just had a hard time with all of the different jobs that I have. And I think we all have a lot of different jobs. And by that I mean we all have to be the research and developer. We're like price action scientist. Then we have to be the system designer. We have to be the trader who actually executes. And that doesn't even get into the personal life. And then I'm talking about YouTube as well, making YouTube videos. It's kind of a lot. So I just wanted to focus on kind of my own system development and take a step back from everything to focus on that. So I'll be uploading less, but hopefully the quality will be higher. And then I want to remind everyone, if you haven't studied the Brooks trading course, highly recommend you go ahead and do that. You can find a link to it in the description of my videos. I think trying to learn price action through my videos alone is not enough. Definitely check out Al Brooks, check out Ali, and take their ideas and play with them and kick it around. Try to, don't just reject anything. Don't just accept anything. Don't neglect anything. Everything they say is important, but just take their ideas and work with them and see if you can come up with anything. So that's it for this one. Thanks everybody for watching and listening, and I'll talk to everybody soon.